Alright, so we've all been there, right? Stuck doing what most traders wind up doing, overcomplicating things by using too many indicators, basically getting bogged down by trying to take in too much information in our quest to look for those perfect entries, right? But you need to use something that allows you to make quick black and white decisions to get you in the market. You have a long bias, you need something simple to help you pull the trigger and get long at the right time. You like the short side, you need a simple way to get short without overthinking and second guessing. And this is where push zones come in. It really doesn't get much clearer or simpler, for that matter, in terms of knowing when the correct time to pull the trigger has come. Now I want to give you an example here on a replay from Friday morning. We talked this out in the trade room live when it was happening. We saw the transition at highs, and what I want to show you is this clean transition at highs. Now, is it always going to be such a crystal clear transition? No, of course not, but you start to tune into what you're looking for, and when you see things setting up this way, you know you have a very good opportunity on your hands with very tight controlled risk. Right? Let me show you exactly what I mean here, and I'm gonna play the replay. I want to show you how this plays out. I'm going to show you how it plays out both on the micro time frame, the 2R range all the way to the left, and the 4R range chart, which is the second chart from the left as the zones start to create on that time frame as well. But let's take a look. So I started the replay here, and I'm going to pause it when we start to see a push zone come in. But one thing you might notice right off the bat, and I'm going to get into deeply into our reason to have a short bias. We talked about it in our trade room, but we did have other tools alerting us to high probability of the market starting to top out, right? But it's a matter of, do you want to step in front of this stop run that occurred right off the cash open, right? This line right here represents the cash open Friday morning. This line right here. Do you want to step in front of that early morning move if you have a short bias, or do you want to wait for a little bit of extra confirmation? And that's what push zones give us, that final level of confirmation, and they give us the most conservative entry because we have that extra level of confirmation, and now it gives us a very clear level of risk, because if we short, leaning on the new push zone that's going to come in here in a second, I'm going to show you, our stop is going to be at the other side of that zone, or a tick or two above the top of that zone. And if it comes back through and takes that zone out, very clean decision for us to get out of the market, because shorts don't make sense at that time, right? But we do see our OA bars here turning red. We see some things shifting to sellers in control here. So we've got confirmation on a few different levels here. But let's continue to let this play, and keep your eye on the 2R here, and you're going to see the 2R push zone start to form. Now I might bump the speed up to 5. All right, there the push zone forms, and now the market's ticking back up into it. And I might have actually, there it goes. And we actually have another zone formed just underneath it. So we actually have a double layer, right? We have the first zone, the market ticks back up into it. So that's your clue, that's your sign. That's the thing that you're looking for, the clear piece of evidence that at least on the micro time frame, sellers have taken control. And that doesn't mean that the market's going to sell off 100 points because sellers in the micro time frame have taken control, but that's the beginning of the market starting to transition to sellers. And that's what you have to see in order for the market to transition. It's always going to start on the smaller time frame. And then what you look for is it to kick in on the bigger time frames. Now, you could use push zones in any time frames that you like. I have a little bit of a bigger time frame feeding zones over here, and this is for intraday trading on the S&Ps. And I have a very micro time frame shooting these zones over here. Now the zones on the 4 are the bigger time frames. I'll lean on these zones actually going forward for supply and demand areas that kind of project out into the future until they get violated. We don't have any supply zones because the market is at all-time highs here, so we don't have any zones above the market, but you can see some demand zones below the market. And as a matter of fact, the market wound up bottoming out into the 87s here. So that was actually a good reference point. But on the 2R, all I'm using these zones for is just as a visual to show me that control has shifted on the micro time frame. Sellers are now in control. We have trapped buyers. We have a few different things alerting us to very high probability situation here of the market going to be at least ticking down a little bit here at the very least. Now this winds up being the high of the day. We don't know it at the time, but it winds up being the high of the day, and this is the beginning of it. Transition to sellers. So let's let this run a little bit, and you're going to see the market sell off a little bit. And then you're going to see a whole bunch of sell zones push zones forming on the 2R, which we're not going to pay any attention to those going forward. They're just confirming that micro-control is still in the foothold of the sellers, but I'm not going to use those zones anymore. In fact, there's a function in the study that you can quickly erase all older zones and just have it print new zones, which I like to do on the micro time frames because I only want to see the zones that are showing me that control has shifted. So let's let this play. And I think what happens here is I actually kick the speed up to 5. We should start to see the market sell off, continue to form some sell zones on the way down, and then what you're going to see is the market eventually coming back up and then coming back into a new push zone that formed on the 4R. So that's an extra layer of information that we're going to have. You know, if you sell up here and you get information that the market is selling off, confirmation, and you're short, maybe you want to take some of your profit down here as a scalp, and then you could use a push back up into those 4R zones to either add into your position or reinitiate your position. There's a lot of different ways to do it, and there is no perfect way. It really is a matter of how you choose to manage your trades, but push zones are a very effective tool to help you decide what the right course of action is to follow. So let's watch this play out here. You're going to see these sell zones just continue to form here. It's all about sellers in control. Again, what I do is come in here now and erase those zones. Now they erase automatically if they get violated, but on the smaller time frames I like to just get them out of there because the chart could start to look a little bit messy. See another zone form right here. I'm going to come in and erase that zone too. So it continues to play out. Keep your eyes on the 4R here, and you're going to start to see a new push zone form to the sell side here on the 4R, which is going to be the perfect spot to re-enter the market. See it? Pop up right there. And again, this is all happening automatically. This is a replay of this happening, but this happens real time automatically. And what we're going to see next is another sell zone form on the 2R. So it's kind of a double level of confirmation here, which is a good thing to see. Now we're going to start to see the market move down towards the bottom edge of the range here. So, you know, just a quick example of push zones showing us who's in control and giving us a clean roadmap. Right, showing us whether the smart money is pushing the buy side or the sell side. Here they're pushing the sell side. Then we can actually see when they shift control. Right, originally they were pushing the buy side right off the open. That was the trap buyers, and then we saw as they shifted control to the sell side, and then it was sellers in control really for the rest of the day. Right, to be able to see this real time, then to be able to lean on these zones for ideal trade entry location, guys, this is a game changer, and I don't say that lightly. So here's a look at the rest of the day here. Let me just scroll through this quickly here, and we'll see how the market wound up just selling off the rest of the day. All right, we didn't have too much more activity as far as 4R zones. In fact, here we are. This was later in the afternoon. I don't know the exact time. Maybe closer to 3 or 3:30, where the market's actually bottomed out here and started to form these micro push zones to the buy side right here, boom, and then another one right here, and then the market closed shortly after. All right, you see them how they bottomed out into those 87s, into this older push zone right here. So great example, guys, of push zones giving us a clean roadmap, showing you when to execute, whether it's a matter of entering a trade because a new zone is formed in your favor, or exiting because maybe control has shifted against you. But it really doesn't get much clearer than the picture that push zones give you. Trade patient, trade well, everybody.